a seat. So I have Frédéric, Matterne from the wealth management at BGL, Philippe Laloire from Marsh, and Thomas Cheneau from Head of Corporate Banking. So welcome. So we'll start with a very short presentation.
So Philippe Laloire from Marsh Luxembourg, and we are specialized in the management of captive in Luxembourg.
And we will soon re-explain for those who don't
of
know
course,
what we mean by captive reinsurance, because the word is coming back so after a while. So very interesting. Thanks for coming today.
Yeah, hello, I'm Thomas Cheneau. I'm the head of corporate banking in BGL. So we have for many captive insurance companies as clients in our books.
Yeah. And I'm Frédéric Matterne, working for BGL Paribas Wealth Management, and I'm a wealth manager and dealing as a wealth manager, asset manager for captives.
And I guess you will explain why the three of us, are here tonight, and what is the link between the banks, the captives, and the corporate. So maybe a first question, and I don't know if Philippe could help us on that, but could you explain the role of captive within a large corporate group, and why some multinational companies choose Luxembourg as a domicile? Because we know that some countries were in competition in the past. I remember Iceland, or Finland, Luxembourg, Ireland. Some countries were in competition. And by the way, how many captives do we have in Luxembourg? I've heard something like close to 200?
Slightly more than 200, yeah.
Oh, slightly more than 200. So, okay, we have 200 captive insurance. I'm sure that a lot of people discover that figure. So, but could you explain a bit what it means and for what type of industries a captive makes sense? Because some are more relevant, I guess.
Before to answer to the questions, I will perhaps remind the concept of reinsurance captive. So reinsurance captive, this is an insurance company owned by a corporate group and that will insure the risk coming from the group, exclusively from the group. And the captive help a corporate group to retain some risk instead to transfer all the risk to the market. This is actually a form of self-insurance. Why companies are setting some captive of reinsurance? So a captive of reinsurance, this is mainly a risk management tool which offers some benefits. The first one, this is the retention of the underwriting value. So in insurance, over a long period, the premium paid by the large corporate companies are usually higher than the claims paid. And with the difference, the insurance generates some profit. And the captive will help the corporate group to retain this underwriting value, and instead to transfer the premium to the market. The second benefit, I would say, this is a better management of more complex or difficult risk. Some risk coming from some companies or some certain activities are quite complicated to be insured. And the captive can help the group in retain a part of this risk and so provide some flexibility in the reinsurance program. Most of the case, the captive will retain the primary layer as the first claims just above the deductibles. And this is similar to an increase of the deductible. And this is encouraging a stronger internal risk responsibility. The third advantage, I would say, this is the flexibility in a changing market. So a captive provides some flexibility when the market conditions become more volatile. In consecutive to a special events, such geopolitical events, cyber risk, climate events, or inflation pressure. Perhaps just a few words about Luxembourg. What specifically Luxembourg?
Yeah, why Luxembourg is a specific, let's say, or a good place to set up your insurance company or reinsurance company?
So you have to know that in the European Union, you have different countries put in place a specific regulation for domicile a captive of reinsurance. I can list the main ones: Malta, Switzerland, Sweden, Ireland, Luxembourg, of course, and recently in France. All these domiciles have some advantage, but Luxembourg remains the main preference for many multinational groups. You have different advantages in Luxembourg. First of all, this is stability of the environment. Luxembourg offers an economic on political and regulatory stability. It is quite important when you establish a business in a country, especially a long-term business. The second one, this is well known, this is equation provisions. So in Luxembourg, the captive has the ability to build some equation provisions. This is a provision to cover the fluctuation of claims. So it means that when you're captive making some profit, you can allocate all the profit to these equation provisions. And when you have a large claims, you have the ability to cover your loss by these equation provisions. And so the equation provisions has the advantage to stabilize your results over the time.
To weight the result.
Yeah, of course. The third advantage, but this is the strong regulatory expertise. So Luxembourg has a long experience in insurance and reinsurance captive. And the local regulator called the CA, Commissariat aux Assurances, know well the concept of captive and put in place a specific regulation around the captive. I will list also the strong financial ecosystem. So Luxembourg has developed a strong financial system over the times. So in Luxembourg, you can easily find a bank, like the BNP, an asset manager, a captive manager, an auditor, and all the providers around the captive in the same countries. And if I would list a last advantage of Luxembourg, this is the ATEL reputation of Luxembourg. Luxembourg is recognized as well-regulated and trust finance center. And the reputation is a real advantage where the governance, the transparency, and the compliance are very important.
Okay, so you mentioned the Commissariat aux Assurances, so it means that they are used to manage this captive, so it's useful to have this expertise at the, let's say, supervisory
yeah, in Luxembourg,
authorities.
you have a specific regulator for the insurance. This is the Commissariat d'Assurance. And for the finance, you have a different one, the CSF. And the regulator has put in place some regulations specifically dedicated for the captive and apply also the principle of proportionality. So you don't have the same rules for the captive that's for the big insurer.
Okay, no, maybe a question for you, Thomas. So you are from the bank, so from a corporate banking perspective, how are captive typically integrated into a banking relationship? And are there specific financing, cash management, or treasury solution addressing the unique needs of captives and the parent groups?
Yes, thank you for this question. The captive insurance companies are very interesting for the bank because especially they sit at the crossroad of treasury management, insurance, and finance corporate. So while the captive insurance company is an insurance company, its financial flows, its capital structure is really connected to the parent company. So it belongs to a group, and that remains very important for the corporate banker to keep in mind to better serve the client. But the captive insurance company, the relationship with the captive reinsurance companies relies on two things. The first one is the cash management and liquidity solutions, and the second one is the risk transfer and treasury advisory. As far as cash management is concerned, you know that captive reinsurance company accumulate a significant amount of cash, so they seek for a very sound country and a very sound bank. And they are looking for three things, especially. The first one is the multi-currency cash management services. So the bank needs to provide multi-currency support, current accounts. The second one is the collection and payment solution that needs to be reliable because we talk about very huge amounts, and it's related to payment of claims, the reinsurance transactions, these things. And the main things for the banking relationship is the providing of investment and short-term liquidity solutions. So basically traditional investment solutions that the corporate banker can provide to fit the usual needs of the captive insurance company, such as saving accounts, call accounts, term deposits. But the corporate banker needs to go further and to go deeper in the understanding of the parent group, because it will help to provide adequate products and services as related to the
according to the profile, the risk profile of
the risk profile of the group, to the risk strategy of the group, and to also to the specific objective of the captive insurance company. Then the corporate banker must have the ability to offer the right range of products, the right range of services to fit this overall group strategy.
So it was out of these 200 companies. So I guess, who are your, let's say, regular interlocutors? So is it the treasurers from the groups usually?
We have both, actually. Some
insurance guys and
I don't know the shares, but we have the CFOs of the groups that manage themselves the captive insurance companies, and we also have the captive managers who are the intermediaries, the usual intermediaries for this kind of counterparties.
Just a basic question, but we always, let's say, update our brochure on why setting up a treasury center in Luxembourg. Could we say that having this captive, let's say, landscape ecosystem expertise, it's a plus for Luxembourg to attracting new treasury centers?
Yes, of course. Of course, the ecosystem is a real asset, and we have many clients who ask for us, many international clients who ask. Why in Luxembourg? Why Luxembourg better than Switzerland or any other country? And I think for the clients belonging to BNP Paribas Group, it's quite easy to put forward that the state is very sound economically, especially compared to its neighbors, and also BHGL BNP Paribas belongs to BNP Paribas, one of the most sound bank in Europe, and BGL also.
And as you said, so you collect premium from all over the world in different currencies, and you pay claims in different currencies all over the world. So I think it makes sense to have a solid cash management bank for the coordination.
This is also very important to integrate, as the case may be, the captive insurance company to the cash management system. But it's quite limited to regulatory and solvency rules, because the captive needs to keep a certain level of cash, so it cannot be fully integrated in the cash pool solution, but for information and for monitoring purpose, of course.
Okay, but let's talk about the return and the investment, because they are, let's say, sitting on a pile of cash. We expect that they will accumulate the cash for the day in case there is a claim that they could pay. So, Frédéric, just you are, let's say, the third part of the equation. So, what are you doing or proposing for this optimization of the, let's say, cash or liquidities we are, let's say, preserving for future claim? And how do you invest? Are you, let's say, duplicating the policies, or it depends on the risk profile of the customers? So you follow the guideline fixed by, I guess, the board or the captive itself. So how does it work, and what is your role in advising customers?
Sure. Very long question, so we'll cut it into pieces.
Step by step.
And the first thing I have to say is that when you look at investment, indeed, captives are naturally sitting on a pile of cash. But what they need to think about is that the claims they may have today, okay, have to be paid today. The ones that are coming in the future, 3 years, 5 years, 10 years from now, they will be corrected by inflation. Yeah? So although you pay the premium today, the cost of your claim will evolve. So in other words, for the captive, it's crucial to be able to beat inflation. Usually, that's
the first goal.
The first goal. Now, when you say that, I bring you back to, let's say, beginning of January 2024. Remember, short-term rates were close to 4%. So captive managers said, okay, great, I'm using short-term deposits, I'm happy with that, because I'm going to get sufficient return, and all of a sudden everything was well. But in the meantime, what we've seen is that short-term rates have decreased, and we see a yield curve that is upward sloping again. So the natural yield curve whereby today, when you look at the yield curve, the bottom part will be around 225 because the ECB has raised the interest rates. But when you look at it slightly longer down the line, let's say 5 years, you will reach easily investments with a yield of 3.5%. That is as of today. So in other words, would you go for a very conservative type of investment, because captives are generally very prudent, you would reach a yield of 3.5%. Now, some captives don't stop there. They say, okay, now this is fine, 3.5%, but I need a little bit of extra. And that extra may come from an allocation whereby you say, look, I put something like 80% of my allocation towards fixed income instruments, and then 20% was exposure towards equity. And this is how you're going to start building then expected returns that will be north of the 4%. So if you want, that is the basic rule they tend to put together. Now, when you're basically a treasurer, captive management may not be your full cup of tea, and you need some expertise in doing so. So you may have, let's say, the help of your corporate banker, you will have the help of your captive manager, but what you also need is to define, okay, now what should be my investment policy to be able to be fit for purpose with the objectives of the captive. And this is where we basically come in, because our core métier is investment. Yeah? And we do that for many types of clients, among others captives. And we're going to basically specify an investment profile that is fit for purpose. And when I say fit for purpose, is just first, okay, the risk you want to take, but also looking at your cash flow projections. What I mean by that is that you may have some captives that say, oh, I know, I receive a premium every year, and I know that I've got statistically these and these claims, and I try to fit the portfolio to cover, let's say, at every year a certain amount of cash flow that is basically maturing from the fixed income portfolio. Yeah? But others may say, I'm going to maximize return. Yeah? And they will say, okay, now I'm going to invest, in my example, more towards the 5-year type of duration and try to reach the 3.5%. But all of that needs to be defined, and that is an exercise that is fully tailor-made. There's no two captives that have exactly the same way of investing. On the top of that, when we invest, there are a series of constraints, which are regulatory constraints that are associated to captives. It relates to ratings, credit ratings. It relates to transparency. Different things that we need to take into account, without what the SCR would go through the roof for the captive, which is absolutely not the purpose. So when we've defined that in a really tailor-made way, we define basically the policy and the line of tools we're going to apply over time. But how do we apply that? Because some captives may be fully self-directed, and we just act as a platform, an execution platform. But most of them prefer to say, okay, now, this is your core business. You're going to invest for me according to the guidelines you've set up. And this is where we are talking about discretionary portfolio management. And then you've got the in-between, whereby we advise the captive in the way they should invest. Yeah.
No, again, it makes sense for corporate treasurers to be involved. So some of us are already involved in the pension fund to manage also and to advise the, let's say, the fund dedicated for the pension of the future, let's say, retired employee. Maybe a last question, because I'm let's say, cautious of the time for you, Philippe. So, but captives are sometimes perceived as primarily as tax optimization vehicle, and you mentioned that it could be a way to weight the results. So, but how would you respond to that perception? To what extent are captives today driven by genuine risk management, capital efficiency, and governance alongside tax?
Yes, I would say this is not really the case. And mainly when you implement a captive of reinsurance, this is mainly there to support the risk management of the group, to get access to the reinsurance markets and to retain some risk. Of course, when you implement a business, yes, there is a tax consideration when you implement a business in the countries, but I would say as all usual business. And today, the main drivers, this is the risk management, the capital efficiency, the flexibility, and the governance.
No, very interesting. So I guess it's a long topic, and so we could certainly, if we have more time, go into the details. But I understand that it's a kind of thing that you, the three of you, try to combine your expertise to accompany the customers to set up the captive, to manage the captive, then to take care of the cash management, because we understand that there is a lot of flow, and eventually to invest in the right products to fulfill the quite high objective you mentioned. So thanks a lot. And again, if you want to have more insightful information, don't hesitate to ask a question to our panelists. Thanks a lot.
Thank you.